You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music can mean but one thing. It is Friday, and we are back, yes, for the first time here in the new year, that is 2021. Welcome to Volatility Views, the premier program for volatility traders. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Hope you all enjoyed our look back on the crazy, tumultuous, turbulent year that was 2020 on our last episode. Almost impossible to encapsulate the year that was volatility in a single 1-hour episode. There will be many years spent, academics, researchers, historians, economists, breaking down all the mad events that happened over the course of the past year. But we did our able best. Hope you guys enjoyed. Remember, if you like what you hear for that episode, for anything else we do here on this network, leave those reviews. Keep them coming. We saw a huge influx of new people joining the network over the course of the past year. We are happy to provide that destination. So keep those reviews coming so more folks can continue to have a lighthouse, a beacon in these troubled times. And, of course, keep those questions coming, too. We do love to hear from you guys. And let's see who we're hearing from on the old program today. I'm pleased to say, first, we are joined, holding down the MIAX hot seat today for the first time in 2021, our old friend, Mr. SHELLY Brown, the Executive Vice President over there at MIAX. SHELLY, welcome back to Volatility Views, and Happy New Year to you.
Mark, thank you for having me, and Happy New Year to you, everybody on the show, and all your guests.
Yes, it should be hopefully a fun, less eventful year than last year, in air quotes. It's already not started out that way, but we'll see. We'll see how the year unfolds. This time last year, we had an assassination by this time and everything else. So last year started off with a bit of a bang, as well, as everyone remembers. Those early months of 2020 are kind of lost in a hazy fog, I know, for a lot of people, but it didn't exactly start off the most calm way last year either. And then we were also joined for the first time here on Volatility Views in 2020, way down deep in the heart of Texas, by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital, by way of Little John. Mr. Meatball, welcome back to the program, sir.
Hey, Happy New Year. It's good to be here. Happy New Year to Shelly our other co-host, and Happy New Year to most of our guests. There are a few that couple that I remember specifically that I don't want to wish a Happy New Year to. And you know who you are.
It's those Thompson twins. I know. Your bitter feud with them continues.
I hate those Thompson boys.
All right. With the gang assembled, let's dive right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review. If you're new, A, welcome. B, you missed a whole heck of a lot last year, let alone the previous decade or so almost of this program. So you got a lot to catch up on. Luckily, there's a lot of great archives for you to sink your teeth into on our non-show days. Of course, this is the portion of the show we break down the week that was and indeed still is, from a vol trading and trending and analysis and unusual activity perspective. And of course, here at the top of the year, maybe we'll also take a little bit of an interesting perspective as well. Let's set the table first before we dive in. Coming into showtime now, we're seeing both spikes and VIX cash right around that 21 3/4 mark coming into showtime. Put spikes down about 3/4 of a point from our last show, which you remember was a couple weeks back now. We didn't really do the regular show on last week. It was more of a kind of year in review. And then VIX cash down about 1/4 of a point, so effectively unched from where it was this time last show. So a lot of movement, a lot of developments. If you're wondering why, hey, we're rallying, how come vol isn't coming off? Well, movement is movement at the end of the day. We've said it before. People always equate only downside can equate to upside in vol, and yet the markets are moving close to 2% a day. Not quite that much today, but still, they were for a while. They're moving almost 2% a day. Then it's going to generate some vol, or at least at the very least over the last couple of weeks, keep us at these elevated levels that we're at right now. And VVIX actually down a little bit from our last show as well. It's at about a 109, down about 4 points from our last show. Let's start back out there in the MIAX hot seat. Shelly, you weren't able to join us on our year in review show, so maybe first, if you have any analysis of this week, feel free to have at it. But also, I know this past year was, I think, just pick your adjective and throw it out there, and they all apply, and they all undersell it at the end of the day. So if you have any thoughts on the tumultuous market year and volatility year from 2020, have at it. And then more importantly, I'm looking at the numbers. They just came out right before showtime here for you guys over there at MIAX for the year. And you guys, I think to put it succinctly, you kind of blew the doors off of it. Your volume up 117.6% year to date. Your market share for the entire exchange group from an options perspective up nearly 19% on the year. So if you have any analysis you want to share on that front as well, have at it, sir.
Well, thanks, Mark, and appreciate you recognizing what we've accomplished. I can't take credit for the volume being up 117%. Obviously, it's
all you, Shelly. Take the credit. It's all you, sir.
Yeah, I was going to say, Shelly, take credit while you can. Take credit.
I think there's bigger players out there. But we're very happy with the 19% increase in market share. Has a lot to do with the functionality of our systems and what we bring to our customers, the speed, the customer service, whatnot. It's what we've been talking about for several years. Is what we build our business on. As far as the 119 or 118% increase in volume, obviously the markets continue to be very volatile. They continue to be very active. Is 35 million contracts a day a sustainable number? It's a function of what's going to happen to the economy, what's going to happen with the virus, what's going to happen with Washington, D.C. We'll take it. I mean, we all love to see the volume. The question is at what cost to society? But we'll get over these hurdles as a country, and we'll see what volumes do the rest of the year. I wouldn't anticipate 35, 40 million contracts out through the end of the year, though.
So what I want to know is when are you going to list? When is the Miami Stock Exchange going to list cash settled Bitcoin and Ethereum options? Because I got people clamoring to start trading that stuff. And that has blown the doors off of really even the news on Tesla.
Yeah, well, Tesla's a whole other story. I'm looking at that today. That's just amazing. But with regards to the cryptos, it's a different group in my team that takes care of that. We can certainly, if you'd like, one of these weeks have somebody from that team join the show. It's not my area of expertise, so sorry, but I've got no comment on the crypto. Not in my wheelhouse.
It certainly is an exploding wheelhouse out there these days, to say the least. Threatening 40,000 out there. We were mocking on our Crypto Rundown program not too long ago. Someone loading up on the Jan 36,000 calls about 20,000 times. It seemed like an absurd trade. Bitcoin was almost 20,000 points lower than that. And now those are many thousands of handles in the money. Tesla, same thing, closing in on 900. It's up 7+% again today. Musk now the wealthiest man on the planet. So I guess we're talking about vol here today, listeners. But if you want to just go buy Bitcoin and Tesla and forget everything else, it'd be hard to blame you out there. All right, let's go out now to the Meatball. Mr. Meatball, you also didn't have a chance to join us on our 2020 year in review. So let's start there before we dive into this week. Obviously, a lot popping off this week as well. What really resonates with you? What really stands out in the complete insanity of the year of volatility that was 2020, sir?
I think March is going to go down. I mean, we set a new modern day record for, the VIX and spikes in a tradable market, right? The only time these indexes have been higher was in theory in 1987, right? So we blew the doors off of volatility. We saw, TVIX get delisted after blowing up and then almost having a reverse volpocalypse as vol dropped, right? TVIX was within, and I remember this, it was within a couple of points of beginning to eat itself and having and doing exactly what XIV did in 2018. It got very, very close. I remember a market that went straight up against everybody's better judgment and everybody's better guesses. And again, I would say that the retail trader becoming a whale is really, I think, the story of the options market and the volatility market in 2020. And then the final piece that I'll kind of remember is the disappearance in the second half of the year of the VIX call buyer. They just disappeared. The put buyers are still there, but volume in calls collapsed in the second half of the year, and the call buyer in the volatility landscape in VIX and in spikes has not returned yet. They will, but they're not there yet. So those are kind of the major points. And then obviously crypto blowing up and Tesla and these Robinhood names, the retail whale, the re-whale. What do you think of that?
The re-whale.
The re-whale, the re-twale.
We'll workshop it a little bit. It's a starting point.
We got to play with this. It's a starting point. The re-twale, maybe? I don't know. The re-twale trader that's blowing up Tesla and Bitcoin and Plug Power and a lot of these names that don't make money but are going up and up and up. This does feel very 99-ish right now especially in a couple of these names. I don't know when the party's over, but it's coming.
Interesting. So are you saying that a tech-oriented name exploding up day after day with little to no news, that somehow feels reminiscent to you, sir?
Yeah, it just a touch reminiscent. It's very interesting. I mean, I live near a couple of their employees that work down here in Austin, and they will quietly tell you that everybody is like, Elon Musk is telling people to sell their stock when it gets bonus to them because he understands how overvalued it is.
Well, he said it was overvalued. Like what? Like 2x ago? I mean,
yeah, and it still is, and it's worth more than Facebook now. It crossed Facebook. He's the richest person in the world, past Bezos, and you got to ask yourself, why is Tesla I'm not saying, listen, Tesla is a good company. They make a good car, but what piece of that business is going to warrant the now nearing $1 trillion market cap?
Well, speaking of things that are somewhat reminiscent, so far 2021 in its first week here has shades of some things that are reminiscent, others unprecedented. So again, that makes another week of 2020, it seems like, because we had, of course, horrific news yet again out of the virus camp. More areas getting locked down under siege. Areas don't have enough ambulances to send out to handle the cases they're getting in areas like LA and other major centers. We had unrest and literal insurrection in the streets over the course of this week, and yet markets were still, for the most part, pretty much green. So that all sounds like 2020 to me in a nutshell. But Mark, another turbulent, in some degrees, unprecedented week here, and yet a green week for the markets, and kind of unched on the vol front. What was lighting up your tape this week, sir?
Yeah, and I wrote this up in our VIX Edge on Wednesday. People are like, why? I thought that the Democrats sweeping, Georgia would cause markets to go down. Now we went up. I thought people storming the Capitol building would cause the market to go down. We went up. The idea, when you trade, leave your politics at the office door, because all they're going to do is stop you from making good trading decisions. If you're, I tweeted this out, and I think I saw, maybe you even liked this, Mark. If you are making an investment decision based on politics, you're not actually making an investment decision. You're making a political decision, and it will stop you from doing the right thing over and over and over again.
Are you saying you shouldn't trade around men with buffalo masks stampeding through the Senate?
I mean, as much as QAnon is not, I like the triple Qs, not the QAnon. That would be my response to that. But that guy, I started to read about what is QAnon.
Then you just stop yourself right there.
It is a deep dive of silliness.
It's zero hedge on steroids is what it is.
It then leads to Pizzagate, which I didn't know was a thing, but is. It is absolutely a trip to read about that stuff, and I would highly suggest not wasting your time reading about QAnon.
Yes, the less time I think we all spend delving into the views of buffalo-headed men, the better here on the show. Let's move on out to happier topics, including the fact, Shelley, we saw one of the big stories in the vol space towards the end of last year was the much-awaited, the much ballyhooed return of the Spikes futures. They're finally back, and it seems to be having an impact on the options. We'll get to that in a little bit as well. But first, let's dive in on the Spikes futures front. Anything you want to share with us, Shelley, now that we've been up and running for coming in on a month? That's hard to believe. It's already been almost a month, but about a month or so, Shelley.
Yeah, it's been almost a month. We launched on the 14th. Been consistently seeing small volume. Markets are anywhere from 2 to 7 up, but the market's tight, 1 or 2 ticks wide. Given it's brand new, I'm pleased with that. We are having a lot of interest in firms who want to join MJEX and get access. It has certainly spurred some people to get back into the options. We had a big options trade this week. Sorry for front running you on that, but there's certainly more interest in Spikes now that the future's back up, and I see nothing but upside to the process.
Yeah, we're going to get to that in a second. That is exciting. Hot out of the gate here in Spikes land. Before we get to that, though, let's get out to the other side of the volatility futures front, known as the VIX futures curve. It's been an ongoing source of fascination for us throughout the entirety of 2020. I do believe it was around this time, maybe a little bit later in the month last year, where our buddy Matt on our Advisors Options show, Matt from ORATS, looked at the bump out there towards the election time in the VIX futures, and he said that's completely overdone. That needs to be sold immediately. And a lot of people thought that was a very rational view at the time, because they were bidding up, as you recall, the election premium was orders of magnitude more than you might expect. Then, of course, other things intervened to raise the front portion of the curve, and we all kind of took our eye off that election ball, at least for a little while. But yeah, that's where we were about a year ago. Now, coming into today's show, listeners, on the VIX futures front, a little bit more elevated, obviously, from a net vol perspective. We're obviously much higher right now than we were a year ago. We were around a 12, I believe, this time last year. VIX cash, like I said, coming into the show right now, right around a 22 and change. And we're seeing that futures portion looking elevated, but otherwise in an interesting shape. It still has that plateau towards the middle there where it kind of gaps up to around, now it used to be 26 and about a half. Now it's about 25 and a half in those latter portions, the April-May portion of the term structure. And it kind of just hangs out there for the rest of the year. So it still is a somewhat weird, somewhat aberrant shape. Not quite as juicy in that latter portion of the plateau as it was on our last show, but still strange. It gaps up from about 22, almost 23 on that front future, up to about 25 and a half, and then just sits there for the rest of the year. It's a weird structure. Mr. Meatball, is this still as weird to you as it is to me, this VIX futures kind of plateau we have, sir?
Yeah, the front end has definitely sharpened up over the last couple of days. This week, the curves of both VIX and spikes, have had quite the move. We went from Friday's close, we had a pretty decent cash to Jan contango, and then contango between Jan and Feb, and then flat all behind it. Now we are in a contango where there's a nice contango between cash and Jan and Feb, and actually Feb has fallen nicely below March. But in between, we saw the entire curve go backward and then flip back down into this contango this week. It's really funky. I still think, like as you said, the back end of the curve is a huge short, and I have traded as such. I think there's some really good opportunities to, trade like an in the money put spread or a futures curve on spikes or VIX, either or, as a way of expressing a curve steepener, because I think that's what it needs to be put in play is curve steepening trades.
And by the way, allow me to correct myself from earlier. I believe I said Bitcoin was threatening 40,000. Nay, listeners, we are beyond it. It got up to 41,500. Right now, it's come off that a bit, about 1,000 points, but it's still north of 40,000, 40,510 right now, listeners. So again, just kind of setting the stage for where we are at the kickoff to this interesting year here that will be 2020. Hopefully, I think we all can agree, maybe a little less interesting than last year wouldn't be the worst thing in the world. As Shelly admitted, it might impinge on the options volume a little bit, but I think we all can live with that, with the ancillary costs for society, as we've all seen, are somewhat a little high for all this options volume. Speaking of options volume, let's get to the good stuff here, Shelly. The year is young. We are on our first real show of the year, and we're already hot out of the gate with spikes options, Shelly. I've been waiting for this day for a while. We've been parsing. It's been nice to see the small retail kind of kept it going out there, even though the futures weren't listed. But now the futures are back, and it seems like that's kind of just to open up the floodgates for spikes options. We had our first 1,000 lots coming back again. It's nice to see that there, Shelly. In particular, an interesting trade, since it's your product, and as we all admitted at the top of the show, you are solely responsible for all of the success for spikes and indeed MIAX over there. I'll allow you to regale our listeners of what went up this week, sir.
Sure. A customer traded a Feb vertical against a put one by one. I can't disclose what side the customer was on. For obvious reasons, but it was nice to see an order come into the market, such size. I can only assume it's one of the customers that were in that was playing spikes pre-market sell-off last year. But yeah, very pleased. Order came in near mid-market, and one of our market makers stepped up and traded it. And so we finally have some interest in the product again. I assume it has something to do with the futures being back up and vol being back down to the level that this customer wants to trade at.
Yeah, I'll break it down for you here, listeners. It was 1,000 of the Feb. You can break it down a couple of different ways. Execution-wise, it might look like a strangle, but I think intent-wise, I think we can all see what Shelly is talking about. You'd think it'd be probably more of a call vertical versus puts. It was the Feb 32.5, 40 call vertical going up 1,000 times. You'd think against the Feb 29 puts, as Shelly mentioned, also 1,000 times. The execution, though, is lifting the offer on those puts, which is kind of interesting. Again, sometimes you have to make these numbers work to make the whole trade fit. It would make, intuitively, I would think it would be that way. But hey, maybe this guy wanted a little bit of juice, and he wants this Feb 29, 32 half strangle in spikes, and then with the 40 calls to kind of finance it all up there a little bit. Mr. Meatball, what is your take on this vertical versus puts, or perhaps strangle with a call kicker, sir?
I'm thinking it was the Feb 29, 30. What was the last strike?
Feb 29 puts, the Feb 32 half calls, and then the Feb 40 calls. And they lifted the offer on the 29 puts.
And so they're all in the money. Or the puts are actually pretty in the money. That's an interesting way, of maybe it might be like a synthetic short future with a call hedge on it. I mean, have we thought about that? Maybe it is a strangle with a short call, and that the customer is trying to short short the spikes, and then be long upside, because the alternative is he's selling it in the money put to basically express being long the future between above long the future with a little space in between 29 and 30. It's an interesting trade.
It is an interesting one. Check it out for yourselves here, listeners. A lot of different ways to parse it. You look at it at first blush, you might think one thing. The execution might make you think something else. Again, sometimes you have to make the prices line up on these way these trades are put up for size here. So sometimes the execution can be a little bit misleading. But interesting stuff. I want to dig into this a little bit more. Perhaps interesting direction going forward for spikes, which is perhaps counter to what we're seeing in some of the other OI out there. Speaking of other OI, let's go on out now to the VIX. VIX was actually doing some paper earlier this morning on the options front, which is saying a lot because, it wasn't lighting it up for a while there. Then the ADV has finally started to tick back up. Coming into, as of a few minutes ago here, we saw VIX putting up about 374,000 contracts. The ADV is also, actually has remained about the same. It's actually down about 1,000 from our last show, so pretty much unched, right around 434,000. That snuck under 400K for a while there as things got a little bit quieter out there in VIX land. And then, of course, of late, things have started to pop off again out there, and we're seeing that volume holding steady north of 400K. Let's look at what's open out there in VIX land right now. If you think maybe our Spikes friend was maybe looking for some upside involved, the folks in VIX land are anything but. You're hard-pressed to find calls. At least there's more than one this time. For a while there's only been one call in the top 10 in VIX for the last couple of months here. Now we're up to two. So we've doubled the number of calls in the top 10, but still not a lot. It cost you 147,000 contracts to break into the top 10, so things getting a little bit richer out there in VIX land. That gets you to the Feb 19 puts, number 9, $1.50 of the March 21 puts, number 8, our first of two calls on the top 10, 158,000 of the Feb 50s, 5 O's. Interesting strike selection there. Number 7, $1.63 of the Feb 21 puts, number 6, $1.70 of the Feb 17 puts, number 5, 171,000 of the Jan 19 puts, number 4, our second and final call in the top 10, 193,000 of the Jan 40s, 40. So got a little ways for both of these calls to start becoming relevant again. Number 3, 200,000, pretty much even, of the Feb 15 puts, number 2, 209,000 of the Jan 22 puts, and number 1 with a modestly sized bullet, let's call it a 22 out there compared to previous tops of the VIX charts, 232,000 of the March 17 puts, so a little bit longer term put action. Not exactly surprising given the trend we're seeing out there of late in VIX land. Total of about 7.4 million contracts open, about 3.9 million on the calls, and about 3.5 million on the puts. So puts and calls, pretty neck and neck out there in the OI as well, which, again, if you know anything about VIX land, you know that's a fairly aberrant occurrence. Let's go on out and see what's lighting it up out there today on a fairly active day. About the biggest, most active contract today, the Feb 18 puts have about 50K on the tape, followed by the Feb 40 calls, 36,000 of those. Feb 60s as well, 35,000, maybe a bit of a funky vertical there, 40-60. Let's see if the meatballs anything to add on that later. The Feb 21 puts, almost 21,000, and then the Jan 20 puts with about 18,000. Yesterday, a similar level of activity, about 459,000 contracts on the tape. The most active contract going out to June, actually. Looks like a June vertical, June 30-40, going up 33,000 times for each of those out there, followed by the March 21 puts, 26,000 of those. The Feb 20 puts, 23K of those. And round out the top 5 yesterday, the April 70 calls, going up 17,000 times. I said it before, in that time frame, April does seem like there's some funky upside that goes up in that time frame. And right on cue, someone trading the April 70s out there. Wednesday was the big dog of the days on the week here. Almost a million contracts on the tape. 963,000 to be precise. Biggest, most active contract on the day. The aforementioned March 21 puts, 68, almost 69,000 of those bad boys going up on the tape, followed by 57,000 of the Jan 22 puts, 56,000 of the March 17 puts, 52,000 of the Feb 21 puts, and round out the top 5 there on Wednesday, 31,500 of the Feb 18 puts. Back to Tuesday also. In fact, the rest of the week was all very active. 707,000 going up on Tuesday. The most active contract, nearly 100,000, 95,000 of the Feb 50 calls. That goes back to that interesting call strike we were talking about earlier. 87,000 of the Feb double calls, 55 calls. 31,000 of the March 40 calls. 30,000 of the March 60. All calls on Tuesday. That's interesting. I haven't seen that in a while. And 28K of the Feb 45 calls. So that means the top 5, all calls. That's interesting because you're hard-pressed to find a call in the rest of the open interest. Monday, similar paper, 714,000 contracts on the tape. The most active contract. This gets back to a little bit more normalcy here. The Jan 22 puts, 61,600 of those, followed by about 61,500 of the March 50s, 61,000 as well of the March double. So maybe that 50 double coming back into play here. 25,000 of the May 110s. 110 calls, yes, listeners. And then 21,000 of the Feb 22 puts. Mark, there's a lot to sink our teeth into here across the board. I thought the 70s were optimistic out there in April, but now someone trading the May 110s. We've got funky verticals, looks like going up all sorts of size. Anything lighting up your tape out here this week, sir, in the old VIX options?
Yeah, on Tuesday, there was a ton of volume, and we did see some call buyers on Tuesday and on Wednesday. And, the piece that was interesting was, it was like, I think the biggest trade was like a Feb 50-55 call spread. But then a trader did, as a package, bought the 45 and 50 calls and then sold the 65s and 70s in March, which I thought was interesting. We did see a little uptick in upside call activity when we were at the lows, and then also when we got that nice little lift off on Monday when pre Georgia runoff, when we got that little uptick. There was some call buying back. Now they ended up being wrong, and that volatility absolutely collapsed. But it was a really interesting. It was interesting to see calls back, right? The reason why the ADV, and like I said at the top of the show, the reason why the ADV is falling is that puts are trading at the same rate they were. Call volume has been cut in half in the VIX contract because, frankly, and we heard this from 50 Cent, right? I don't need to hedge using the VIX when it's already made its move. So I think that both the SEBO and MIAX for the spikes product would quietly not mind if those indexes went back to 15 or 14 or 13. Obviously, they want to keep all the other volume, but for these proprietary products to really take off, we need to see vol get lower.
Well, speaking of not lower, but the opposite of that, higher, Mark, you can admit to us all here, we're all friends here, this 25,000 lot of, I'm looking at it right now, 25,000 of the May 110 calls went up for 30 cents on Monday, exactly mid-market. There were 25 at 35. This was all opening. There's no closing of papers. There was no size OI to close here on the May 110s. Mark, you can admit it all. It's just us here talking here. That was you, right?
You know what? Yes, it was. I did all of it. And what you don't know is that was actually done as the final piece of an over-the-counter package involving me buying those calls, me buying Tesla, me buying Bitcoin, and me buying the pizza store where Pizzagate took place in South Carolina.
So you are saying now you are a genius fund manager. You've bought all the things that can only go up, sir. Well done.
Yes, that is me.
You have done your due diligence on behalf of your investors. Yeah, that's a fancy one and an interesting one. Interesting execution. Looks like someone maybe bought those. I'll have to dig in a little bit more to make sure. Getting on out to VXX. Let's see how interesting VXX is. And coming into showtime was at about a 16 and a quarter. That puts it down about a point from our last show. Remember, we had that brief flirtation there to the upside north of the 18 handle with the VXX. People thought maybe it would threaten 20 again. And as I said on the show back then, I said probably if passes prologue, it'll go back the other way. And that's pretty much what we're seeing out there again. Decent paper on the tape today. Already 237,000 contracts on the day. That's pretty much in line with the ADV. The ADV is about 245. That's gapped up a lot. It's gapped up about 65,000 contracts since our last show. So there's some paper hitting the tape out there these days in VXX. Before we break that down, let's break down the top positions out here in VXX land. Right now it's 60-40 puts to calls, in the top 10. Usually VXX pretty put heavy. These days, more of a mixed bag. Cost you $20,500 to break into the top 10 in VXX. That gets you to the Feb 13 half puts. Number 9, $21,200 of the Jan 15 puts. Number 8, $21,400 of the Jan 18 calls. Number 7, $23,100 of the Jan 20s. Our second call on the list. Number 6, $24,000 of the Jan 17 puts. Number 5, $25,000, almost $26K of the Jan 16 puts. Number 4, $28,600 of the Jan 25 calls. Number 3, $29,900 of the Jan 18 puts. And then we get some more impressive numbers here. Numero dos, 44, almost 45,000 of the Jan 15 puts. And the number one position out there in VXX land right now, 46,000 of the March 20 calls. So it is a call that is leading the dance. Someone perhaps hoping what I was talking about earlier, maybe they're going to threaten that 20 strike again in VXX, or perhaps overwriting it and saying, the heck with this. I'll have to dig into that one a little bit more too. Total of almost exactly 2 million contracts open, 1.99 million contracts open, about 1 million on the calls and about 900,000 or so on the puts. Let's look really quickly what's lighting it up today, then we'll get the Meatball's thoughts on all things VXX, including the fact that these calls are dominating the open interest right now. Well, let's see. The biggest, most active contract today in VXX, 22K of the Jan 15 puts, and then followed by 13,000 of the Jan 16 half puts, almost 11,000 of the March 16 calls, and about 10,000 as well of the March 16 puts. So maybe a straddle going up out there. 7,600 of the March 13 puts as well. Of course, we had old buddy, Mr. Short Ball himself, Dave Lincoln, chiming in actually this morning about the Jan 15 puts. He says customers buying about 12,000 of these bad boys. Looks like a little bit more than that now, Dave, about 22,000. He said they paid 9 cents. He thought it was closing. I don't know. I'll have to dig into that one to see a little bit, but that could be the case. People draw these nice lines in the sand in VXX puts. Usually January seems to be when they like to do it, and maybe our friend here thinks he's gotten as much as he can. He's getting the heck out of Dodge with his 9 cents. He also talked earlier this week about, looks like the Feb 15, 13 half, 1x2 put spread going up almost 9,000 by 18,000 times. The prices were 72 cents and 17 cents, respectively. So 1x2 put spread. We talked about ratios before. We haven't been as much of a fan of those in VXX as we are in other vol products, let's say a VIX or a Spikes out there. But Mr. Meatball, a lot to unpack. What are your thoughts here on the fact that calls may be coming back in favor a little bit in VXX, including our number one open interest position right now are the March 20s. The fact that we're seeing some interesting volume going up today, and anything else that caught your eye this week, including Mr. Short Vol's favorite 1x2 put spread, sir.
Well, yeah, I mean, this week we saw, the VIX curve go into a full-on backwardation where the cash is over Jan's over Feb. And, all the things people hate about VXX under normal circumstances flip on their head when we enter a backwardation phase. And with how flat the curve has been and with how flat, and with some of the strength that we've seen in VIX, when we went backward, there was a real brief period where it looked like the vol could really, really take off and make a hard run at 30. All my traffic lights went from red to yellow, and that was a clear sign and probably the driver of that volume.
All right, let's look really quickly here. Since it is the start of the new year, we'll embrace the full pantheon of vol products, including the much maligned UVXY. I haven't checked in on it in a little bit. Coming into showtime, it's about a little bit less than 10.25. That puts it down about exactly a point from our last show. The ADV has ticked up out there as well. It's up to about 207,000. That puts it up 67,000 from our last show, listener. So VXX and UVXY catching some paper these days. Today, it's already close to that already, 193,000 contracts on the tape as of a few minutes ago. Let's break down. Let's do a top five out here in UVXY land. Number 5, 22, almost 23,000 of the Jan 10 puts. Number 4, 23,600 of the March 10 call. The 10 strike. Well, of course, that's the at-the-money strike now. Otherwise, I would say our friend at Hercules was back in action, but the 10 strike is kind of at the money, so other folks may be playing there as well. Number 3, 24, almost 25,000 of the March 5 calls. That could be our friend at Hercules. Number 3, 29,300 of the Jan 13 puts, and numero uno here, 36,800 of the Jan 12 puts. Interesting that the top positions in UVXY are starting to rival, at least from a size perspective, starting to rival the top positions out there in VXX. Kind of interesting. Let's look here really quickly. The top trades going up today. The 10-half calls are where the action was today. 24,400 of those bad boys going up, followed by the 11 calls, 13,000. So not quite a ratio, but close to it. Those 10-half calls are expiring today. So those are probably closing. And the 13,000 are going up on the Jan expiring next week on the 15th. So maybe also potentially rolling on a ratio out there as well. We also see the Jan 10 halves going up that expire next week for 9,200 contracts there as well. So a lot of action on the 10 half strike expiring today and expiring next Friday. And then rounding out the top 5, we've got the Jan 10s going out today, about 8,700, and the Jan 11s going out today, 8,700 of those bad boys as well. So maybe some closing verticals or just closing out strikes here across the board here as we head into expiration, or maybe, who knows, a little bit of expiration swinging for the fences out there. Mr. Meatball, anything catching your eye out there, and everyone's favorite maligned volatility product, UVXY, sir?
Yeah, it's definitely moved around. It's definitely had a busy week. It seems like it's kind of stuck here at 10.5, right, and it has been for a couple of weeks. It did touch an all-time low today before, again, backing off. Pretty decent volume today in it today, though. On the day, 13,000 of the 11s have traded that expire next week. 3,000 and a halves, 3,000, almost 6,000 of the 12s, and then some decent volume on the puts. These are all for Jan next week. So some interesting volume today at a minimum. Think about this: the 24,000 of the 10.5 calls that expire today are on the tape today, Mark. And 8,000 of the 10s and almost 9,000 of the 11s are also on the tape, and they expire in about 2 hours and 15 minutes.
Yeah. It's almost like if I just said the exact same thing. Well done there, Mr. Meatball. Let's roll on in really quickly. It is the beginning of the year. That means some eyes, if you're looking beyond all things macro vol, you can maybe be forgiven for paying attention to some micro vol in terms of individual earnings events. It was a, shall we say, interesting year. I still do want to sit down with Matt and do kind of a whole year in review, kind of retrospective on the year from an earnings volatility front. I think the takeaway was don't buy it last year because it was a bloodbath for premium buyers out there. Let's see how the year is shaping up so far this year. We haven't really had the kickoff of the big reports yet. That comes next week with the financials, JP Morgan, Citi, Wells, all those bad boys kind of kicking it off. This week we had some names, though, including my favorite name out there, the Walgreens Boots Alliance. It just sounds like it's straight out of Star Trek. And, of course, who are they allying with? But that's a conversation for another day. Bed Bath & Beyond, Conagra, Micron, all sorts of fun stuff popping off. We also have some reports for those, the move results reports, the much beloved. You check these out for yourselves over there, theoptionsinsider.com. You know where to go. And let's go to the Alliance first, the Walgreens Boots Alliance. They went into their report actually at 43, pretty much even on the stock front. They were pricing in, about 4.8%, and they delivered 5.3%. So actually a little bit of modest outperformance from an earnings vol perspective. Perhaps that's the start of a trend for 2021. We'll see. We also had Bed Bath & Beyond. They were at 21, pretty much even. Going into their report, they were pricing in 13.3%. They delivered 10.5%. So as soon as I said it, it was ripped away from me. Underperforming yet again from a vol perspective. There's more to come out here. We'll start picking up with these hot and heavy again starting next week. And, of course, in a couple of weeks, you've got the Netflixes and the Intels and a lot of the names. You guys like the FANGs, all the other fun stuff. So there's more stuff popping off soon. So we'll keep an eye on earnings this year, see if it makes for a different trajectory than it did last time. By the way, our last season out there, we have the report right now. And actually, no, I'm looking at this is an average. We don't have last season anymore. I'll have to go dig that up for you. But last season, it seems like we started to maybe hit that inflection point where they squeeze the ball, they squeeze the ball, they squeeze the ball so much that finally the straddle will start to outperform and we actually start seeing similar levels of what's being priced in versus what's actually being delivered in the marketplace. And that seemed like last season might be that point. So we'll see if we see a little bit of interesting developments on the earnings front this cycle. But now it is time to see what you guys have in store for us in terms of interesting comments and questions and everything else. So let's dive into a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's see what we got here. First, let's kick it off with what we're currently picking your brains about out there. I think we have a little bit of time left before this expires. Yes, we do. So if you're listening to the podcast, you're listening live, you can certainly vote. Looks like a lot of you already have. But if you're listening after the fact, like I know most of you do, you still have a little time to get over there at Options. Make your voice heard on our current nice and basic, nice easy poll to kick off the new year, asking you a very simple question. Will markets close higher or lower at the end of the year? That's all we want to know. We gave you three choices, actually, to make it a little bit more fun. We said higher, obviously, lower, and I'm already in cash. So you could equate that as being similar to lower, but maybe a little bit more fun. So that's our three categories. Shelly, we shall start with you. If you have a viewpoint, have at it. But more importantly, Mr. Shelly, where do you think our audience is lining up for the year, sir? Our audience does like to fade things sometimes, Shelly, so maybe that'll put you in the right direction. This year, though, is interesting. I will say this. It is interesting the way they are lining up. Mr. Meatball, same question for you. I know you're never short of opinions out there. If you have one about where the markets are turning, maybe you hinted at it a little bit earlier and you think this feels a little bit 1999-ish. Easy for me to say. And then B, more importantly, where do you think our audience is lining up, sir?
So knowing our audience, they're a pessimistic, market-hating bunch. They are saying, I'm already in cash. And my gut feeling is that we are going to be marginally higher by the end of the year. I mean, we already are higher on the year. But I just to put things in perspective, I put on in the S&P March 4,000, 4,100, 4,200 call fly, and I think I'm going to be right.
Well, there you go. I'm with you. Our audience usually does fade everything to high heaven. They're a deeply cynical bunch. And yet
they're a cynical crowd.
This time, not so much. 65.1% mark saying higher.
Ooh.
That surprised me. Did that surprise you?
So what? So we got to ask them about crypto and Tesla for next week.
We did ask. I did ask them about crypto. We can maybe get to that a little bit later. But
I want to hear. I want to hear about that. Yeah. That. Well, good job, guys. Way to not be completely pessimistic.
That's a sign that the worm is turning. The market's going to turn now, definitely, for sure. Of course, we didn't give them degrees. They could be like you, slightly marginally higher. We didn't say, orders of magnitude higher or anything like that. But just in net absolute terms, only 26% saying lower, 8.9% saying I'm already in cash. By the way, we did ask them about crypto on our Crypto Rundown show earlier this week. The quick flash poll effectively saying, did this explosion in upside in Bitcoin, has it made you more intrigued about trading, let's say, options or the spot on ETH and Bitcoin? And they're about split, 50-50 roughly on yes and no. So I guess it takes more to move them into Bitcoin. Let's see here. Oh, this goes earlier. Mr. Meatball, you were saying you thought this market felt very 1999-ish to you. You thought the turnaround was coming, but you didn't know when. We've got Ed Hale here. It looks like he's a singer. But he was listening, I guess, and he said he agrees with you. He says Bitcoin, Tesla, and EVs in general, and cloud sticks, I guess like the Rokus, being the new AOL, Yahoo, and Cisco of this era. He says these PEs are insane, though people keep saying it's different this time due to low rates. He says, I'm just not comfortable personally. So there you go, Mr. Meatball. The official account of this singer, Ed Hale, agrees with you, sir.
Well, there you go. I mean... Tesla is only trading 30 times sales. I mean, that makes total sense. You mentioned Walgreens Boots Alliance. That is actually healthcare stocks. Walgreens and CVS, I think, are my picks for the year. I think with COVID distribution and the internalizing of medicine, you're going to see those stocks much higher by the end of the year. I like Walgreens at $55-$60 by the end of the year. So I put this out on over the weekend in our pit report. I said, I like the Walgreens 40 calls for about $4.50, and those are already $9. So go me.
There you go. Go you indeed. All right, next up, we've got Nibs. An appropriate question, Shelly, to kick off the year. Now that we're seeing this paper kind of picking up again out there in Spikes Options. Nibs wants to know, well, Happy New Year. Well, Happy New Year to you, Nibs, and everyone else listening out there. Nibs wants to know, are the commissions for trading spikes the same as other options, or are there any other fees tacked on top? Mr. Shelley, you're the go-to man who handles everything single-handedly, as we determined over there in MIAX land. What do you have to say for Mr. Nibs on the question of commissions and or fees for Spikes options?
So that's a great question, and it's a much more complicated question to answer than one would think. So first, let me start by saying, Nibs, Happy New Year to you as well. Thank you for listening. The fees on Spikes options and Spikes futures are significantly cheaper than the published fees charged by SIBO, and there are no surcharges on top, which SIBO does have. However, depending on how you're trading and who you're trading through, those fee differences may or may not translate into different costs for you. So if your broker has a flat fee for options, it doesn't matter to you if they're getting rebates, paying high fees, paying low fees, you get charged a flat rate. If you get passed through the actual exchange fee, then trading Spikes would be much cheaper for you.
There you go, Mr. Nibs. A good question. Happy New Year again to everyone out there. Now it's time for the most difficult, the most dangerous, indeed the first crystal ball of 2021.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
The crystal ball. I'll have to go back and see if we can crunch the numbers on who, if anyone, was our victor for the mad year. That was 2020. Spoiler alert, I don't think any of us really won in the technical sense. There weren't a lot of bullseyes last year, I think for obvious reasons. I know my own record was well below the standard I have established for myself here on the show. We had a few interesting highlights, I think, here or there. I think Mr. Meatball hit a couple there as well. But outside of that, the highlights were few and far. I will say it is to our credit. We didn't change our goalposts. Even when VIX and spikes were threatening 80 and things were moving hot and heavy, we kept it to have to be within 1 point to be considered a winner. So I think that's a feather in our cap. We didn't, even though we probably were justified in expanding that maybe to 10 points, we did not. We soldiered on. So I think we get bonus points for that. Let's see how we're looking right now. Remember, we actually predicted this a couple of weeks ago. It was myself and the Rock Lobster and Tom, the volatility product specialist over there at MIAX. We were predicting this on our final live show for December there, not our year in review show. And we were predicting a couple of weeks into the future for today, January 8th. Remember, there was some kerfuffle on the show about when the next show would be. But we came down to today, January 8th, and I was looking pretty good, actually, at a 23.05. Mr. Rock Lobster, he thought post-Georgia runoff, all the vol would be gone. He was at a 19, so he's out of the running. And Tom was looking decent as well. He was at 23.95. And right now, Spikes is at 22 and a quarter, and VIX Cash is at actually 23.33. So actually looks like I'm definitely within our goal, and I'm about a quarter of a point, a little more than that away. Actually, just ticked down again. So yeah, I'll take as close to a bullseye. Usually, a bullseye has to be within 1/10 of a point. But since we're kicking off the new year and we're being fun, let's make it a bullseye. Why not? Let's have fun. That'll be our one concession to the mad times out here. But Tom looking pretty good as well as 23.95, and Mr. Rock Lobster feeling the fade as usual. And so he's not rewarded this week. All right, so that means I get to choose who goes first, or maybe I'll go first. Now, you know what? I'll set the tone for the year that is 2021. I will go first. I will be unafraid to venture into that breach here for the year of 2021. So, yeah, we're at about 23 and change on the VIX Cash. And, again, Spikes at about 22 and about a quarter. Pretty much exactly. We are post-Georgia runoff, post all that madness. We had a little bit of, shall we say, dust up in D.C. this week. Who knows what the next shoe will be to drop coming up. We do have the inauguration coming up, but that will not be before our next show next week. A lot of people think maybe that will finally take some of this juice out of the bowl. So I'm going to say not that dissimilar from where we are right now. I'm going to say this time next week, I'm going to say 22.55 for your Spikes and your VIX. All right, Mr. Meatball, I have set the table. You are now free to come in and pick your 17 or whatever you feel like.
All right, so my working theory is President Trump resigns over the weekend, Mike is president, and then we see vol collapse because Mike Pence is boring, and we have and my outlook is also my position, folks, just an FYI. So I'm going to say 20.20.
I thought for sure you'd be going into a teens. All right, 20.20. I should change this to the meatball. There we go. 20.20. So 22 double for me, 20.20. Nice 2+ point range here for you guys to squeeze in between, listeners. Do you agree? Do you think boring Mr. Pence is going to slot right in there and kill all the vol in the final week and change of Trump's tenure? Hit us up. Let us know in the vol voicemail, listeners. There we go. All right. Unfortunately, that music means we've come to the end of our first sojourn, our first dance with volatility for the year that was, or is, I should say, the year that is 2021. I don't get ahead of myself. There's many more dances to come, so stay with us throughout the year, listeners. If you have thoughts about vol, if you have questions about vol, and clearly you guys have many of them, if you have your own thoughts about where you think vol would be, hit us up, let us know. We do love to hear from you guys. As wild and as different and as varied as your opinions are, they're always interesting to us. Well, before we go, let's go back around the horn. Let's start with Mr. Shelley. Shelley, spikes, it's back. They're lighting up the tape with size options prints. If our listeners are intrigued, they want to learn more about all things spikes, sir, the futures, the options, the index, where should they go? What should they do, sir?
Please visit our website at miaxoptions.com/spikes. Everything you ever wanted to know is up there. We have redesigned the website. There's a lot more documentation available now. There's a much better overview with the fact sheet and the resource guide, and the futures are covered in there as well.
There you go. MIAXoptions.com/spikes, the place to go for pretty much all that data. As Shelley just said, the futures, the options, all the data for the cash index, even a link to a cool little show called Volatility Views. What more could you possibly ask for from a volatility-oriented destination? And you know where to go if you want to learn more about all things Matrix. It's just matrixexecutions.com, the place to go for execution services and trading technology. And Mr. Meatball, if folks are intrigued, they want to try out the Little John for themselves, maybe they want to debate your crystal ball pick, or maybe anything else, the market's going to sell off, that's going to get some people up your way. Or maybe they want to talk Bitcoin and Tesla. Where should they go? What should they do?
Yeah, we write lots of content every day that is super valuable. Go to optionpit.com, sign up for our e-letters. You can learn about VIX and volatility. You can learn about how I trade. We got profits and pumps with Leisha, and power income with Bill, and then Andrew's writing a FOMO piece every week. So you got to come out and check us out at optionpit.com. Read our blog. Follow me on Twitter at optionpit, and enjoy your weekend.
There you go. Optionpit.com is the place to go. And on behalf of Shelley and everybody over there at MIAX, even though we all know it's a single-man operation, and, of course, everybody over there in the land of Matrix, and, of course, Mr. Meatball and everybody over there in the land of the pit, and indeed myself. I thank all of you out there for downloading, streaming, subscribing, for making 2020 such an amazing year for Volatility Views. I don't think I've ever seen as many Vol Views episodes cracking into the top 10 of the network before. So you folks clearly had some vol on the brain last year. We love all of you. Keep those questions coming. Stay safe out there, listeners, in these turbulent times. And we'll see you back here next week for another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.